Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Singapore. As promised yesterday, we had spoken about Walmart. And today I wanted to talk about Target. Target's one of those brands, American retailers, which is synonymous with the American country. And a lot of people know about Target who have been to the US and know about Target and Target malls. So I really don't want to get into the history of the company. It is very old. It's been there for almost 100 plus years in one form or another. And the current version of Target, which we know, at least it's been there from the 1960s, the way we see it with the bullseye logo. But the question is it in value today, and is it in decline, or is it a temporary thing which they can come out of, is what the discussion is. If it is temporary, then maybe it's not a value trap and we should look at it. But if this seems to be a systemic problem and there seems to be something that is slowly devolving and taking the company down a funnel and to the end, then maybe we should avoid it. But that said, let's dive into this first and see where Target is. Recently, it's made news because the sales forecast has been cut, and that's mainly because of what's happened in the quarter one. Sales is down 3% thanks to the slower traffic in their stores, and even the people who are entering Target seem to be buying less per visit than they used to. That means per visit spend has dropped in Target. That means people who do come into the store are not buying as much. So what is the main challenges which have been facing them recently? One is a discretionary spending slump. That means more and more Americans in the middle class and lower middle class are feeling the pinch thanks to what's happening in their economy since January, and that has led to a slump, and they don't want to spend as much as they used to. And another problem for Target is 65% of the things they do sell are considered non-essentials. So then that being non-essential, of course, will face more pressure when it's in these kinds of situations. The other thing which is happening is the boycott and backlash. Trump, of course, famously moved against the DEI in the United States. First, the federal government was asked to enforce these DEI rollbacks. Then he said corporate America should follow suit, and he encouraged, more like dictated, that all corporates in the US should roll back all these DEI hires which they've been doing. Unfortunately for Target, they seems to have been hit harder as a brand compared to all their peers, who all done the same, pretty much bowing down to Trump and rolling back these DEIs. But Target's brand has taken I would say, significantly larger share of the hit compared to the others thanks to this rollback. There's been a boycott and backlash. There has been poor inventory forecasting by Target. That means they've not been able to predict how much sales they'll be doing on certain categories, and they've not been stocking it correctly. And the stocks which they do have been glut in their inventory and not been moving. So this has been another issue. Aside from this, there also has been other thing as strategic changes. Management has gone through a reshuffle. Top people have exited, and some people have moved to new positions in the company. But there has been renewed focus on growth, and product push has been coming now in the pipeline. And this new product push from Target seems to be this $1 product. They think the way out of this mess they're in is to attract customers back into their store by offering them something like a $1 product, as low as $1, that is, to incentivize people walking in saying they're going to get more for a dollar every dollar they spend in Target. But is that going to help? Don't know, because the market position they've been enjoying has been taking a beating from their main competitor, who's Walmart, who we spoke about yesterday. Walmart has been hammering them, and even including in the higher income shopper bracket, where sometimes Target seems to have a little bit of a cushion, Walmart seems to be eating into that also and giving them a run for their money. There are usually 35 categories where they're gauged, these retailers, on being leaders, and out of that, Target has lost ground in 20 of them. So you can imagine that more than 2/3 of the categories which we are grading retailers on in the US, Target has fallen short in 20 of them. And Brian Cornell, once considered the hero as a CEO for Target, who helped him navigate the pandemic so well, now has become the villain of the Target because of all the trends he's missed and all the lagging growth which Target has been going through. So you can see within a matter of a few years how your fortunes can change in corporate America. Even if you're being celebrated as a hero, how a few quarters, a few years of misses and hits can land you in hot water. So what are they trying to do? The main problem for Target is they have a heavy dependency on goods being sourced from China, which is around at 60%. So now the management is trying to do two things. One is they're trying to pivot away from China, to reduce it at least to 25% by the year end or by next year. So from 60% bringing it down to 25% is going to be a big relief for Target. And of course, they're trying to renegotiate all their terms with their vendors and suppliers. This will also help them in the short term. Walmart got a lot of flack from Trump, saying that they have no choice but to pass on some of the tariff pain onto the consumers. So people like Home Depot and Target have become more cautious in voicing these things out. Target, especially considering it's already taken such a beating. In March, they were talking very differently. Now they're not saying they'll be passing on cost of the tariffs to the consumer. They're trying to pivot their message in a way which is palatable to Trump. So we'll have to wait and watch how Target handles these coming few months when it comes to tariffs and the real effects of tariffs take grip in the United States. So where do we stand? Well, if you look on year to date, Target shares have fallen by 27%, while the S&P 500 has gone up by a percentage point. The intrinsic value, I would say, of Target is around, by discounted cash flow method, would put it around $135, and the relative value is at $176, bringing me an average around $155. Right now, Target is trading in the market for $91, which puts it under around 40% undervalued. But these are just numbers. What does this mean? Well, if you look at Target's price chart from 2020 till now, they were at discount all through 2020. Then, right about in December 20, because the way they were handling the pandemic, they went up all the way up to 200, and then they were bouncing around that range. Then they had a severe correction in 2023 when they recovered, and after 2023, since the beginning of this year, they've been dragging, and finally now the price is literally, the bottom is broken in the price of Target and it's come down to 91. So looking at this, would you consider Target? The PE ratio stands at 10. The forward earnings is almost at 11. That means going forward, it might improve the earnings. But the PEG ratio, if you look at, is at 19.59. That's showing there's poor growth compared to the price to earnings. So if you look at the growth prospects for Target in the price to earnings they're at, it is very, very expensive. Price to book is priced at 2.9. That means there is still a lot of confidence from investors in Target, and dividend yield is at 4.8. But this is all said, it looks just as numbers, and they look very reasonable and they look very fair for value investors. The question remains, what are the red flags, and can Target overcome these red flags in the near short term or even in the medium to long term for value investors to unlock value? I would say sales being down is a big problem. High debt levels, there are 94 debt to equity ratio, but they have a very good interest coverage, and EBIT is at 14 times, which is very good. The only problem is consumer backlash. How much more consumer backlash is Target going to take for the bowing down to Trump? And of course, the tariff exposures themselves. And are they able to navigate this and get out? But if you see, all these problems in my book seem to be rather short term. Sales are always, the ebb and flow of season, and these things can change. Once we've had the right leadership, the right management, and the right products are put in the stores, these numbers can change. And as far as debt levels are concerned, they seem to be in a very good position to cover these debts. There doesn't seem to be an issue with debt, though the debt levels are very high. Consumer backlash is also seasonal. By having the right management and the right messaging with a good PR, they can overcome this. Also, I do feel tariff exposure is something we'll have to wait and watch. Trump himself has rolled back many of the tariffs which he's put out there, and we can't see clearly through this fog where the tariffs are going. So all these seem to be very short term in what I'm looking at. But if you're looking at Target for a long hold of 5 years plus, is it at a good price? Is it at premium? Or do you think all what I'm saying are problems too big for Target to handle, and this is going to be a long haul for Target to get out of the mess they're in. I'm interested to know what you think. Do you think Target is a good buy at this price, or do you think Target should be skipped, considering all the red flags which I just mentioned? They will not be able to look at them recovering from this in the short term, at least for the next few years. So, if anything, Target prices will keep correcting further and further as the year rolls on, and we should actually wait and watch and be cautious rather than taking this opportunity to invest. Thanks for watching Be Rich, and I hope you enjoyed this video. I hope you had a wonderful evening, and see you again tomorrow with something else interesting to talk about. Good night.